This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a
breaking news. What is up, everybody? Welcome back to another episode of Benzinga Live. I hope everyone had a good weekend. Feels like a Monday for me. I know it's not, but if you guys were watching our YouTube yesterday, you know we were not live yesterday, but for good reason. I made the trek, traveled all the way up north. Actually, I don't even know if it is north of here. It's west. I went west to Green Bay for the Green Bay Packers Lions game Sunday night. Endured the cold to watch a Lions victory and drove back yesterday. So thank you to everyone who was patient with us not having a Benzinga Live show yesterday, but we are now back. Good to be back with everyone, and we've got a good show today. I think my man downtown Nick Brown is going to come join us to talk about some of the biggest headlines of the day. We will take a look at all the top headlines. We're going to be, of course, previewing Thursday's CPI report, which will be the biggest economic data release that we've gotten since last month's CPI report. Will be another sign of if the Fed's interest rate increases have been working to bring inflation down, or are we still going to be dealing is Powell and the Fed still going to be dealing with higher inflation and continuing to have to increase those rates? That will be something that we'll see the market's reaction on Thursday morning. Excited about that. We'll take a little bit of a deeper dive into that preview later in the episode. Other big news headlines I've been watching today. Coinbase trading higher, up 5% after what? After the company announced it's laying off nearly 950 people. I think 20% of its workforce, according to Benzinga Pro. Coinbase is laying off, and yet the stock is trading up. You might say, Aaron, why in the hell would the stock be trading up after the company's announcing layoffs? If a company's announcing layoffs, that must mean the company's not doing well. And I'd say, yeah, you're right. But, and here's the key, but we knew Coinbase already wasn't doing well, right? The whole crypto industry has been getting absolutely crushed. All the crypto companies have been put in a tough position, and now investors are saying, oh, Coinbase is taking this seriously. Coinbase is restructuring. Coinbase is cutting costs. Maybe this is the beginning of a sort of, retribution type of comeback for Coinbase. And I've, read about, there's a theory essentially that kind of, when Coinbase started its layoffs, it laid off about like 10% of its people. And there were people coming out saying basically, look, this is going to make problems worse. Laying off like 10% of the staff when you need to lay off 50. They were basically saying, get out in front of it, cut out however many people as you need to if you're Coinbase from the get-go, and allow that to be your starting point to start restructuring the company, to start trying to get back to become some sort of investable company, because right now it's not. Instead, you can kind of start this death spiral thing where, okay, you lay off 10%. Well, guess what? Now you're still burning too much cash, but now you're a little bit less productive. Now you got to lay off another 20%. Then you got to lay off another 10%. Whereas I think a lot of investors would rather see the company do more earlier, even if it ends up being sort of an overreaction, because it allows you to start being able to then start hiring sooner, which is something that investors actually like, is when they see a company after it's restructured start to begin hiring again. So if Coinbase had laid off 50% of its people when it started layoffs, or however many people it's laid off now, this is the third cut Coinbase has made in the last year. Third cut. And basically the point is that maybe it would have been better to just make one big cut as opposed to these incremental cuts, which, of course, the stock, honestly, like the fact that Coinbase's stock has been able to hold up at $40 here and just basically been kind of trading this range since May. Obviously, the stock took a big hit after FTX went down from like 75 to 40, but the fact that it's even holding up here to me is impressive, and honestly shows me that maybe there's some kind of like underlying value here that the market's looking at that is saying, even if crypto doesn't come back, even if Bitcoin doesn't come back in the way that the way that we were talking about it a year ago, the way that people were trading it a year ago, maybe there is some value baked into Coinbase somewhere. I don't know where it is. I haven't done my like DD to look at crypto or Coinbase's like proprietary, technology and their trading platforms or whatever. But like, I don't know. What's its market cap right now? 10 billion probably, I'm going to guess. 8 billion. So yeah, I don't know at what point does that become like a buyout target, something like that. I don't like the stock here, Coinbase, I will say. I mean, that is crazy. So Robinhood and Coinbase are basically valued at the same. I wonder what Coinbase's peak market cap was. Because I mean, at one point, right, crypto's a $1 trillion industry and Coinbase is one of the biggest players. Now, right, the total market capitalization of crypto has fallen off a cliff. And not only that, but obviously the market cap of Coinbase has come down with that. Robinhood as well. And Robinhood, you know, as much as it wants to isolate or insulate itself from the other crypto names, so much of the company's revenue and trading activity came from crypto. I mean, when we talk about Robinhood's peak and like the numbers they put out, even the company itself said like, yeah, like 80% of our revenue from last quarter was from people trading Dogecoin. So anyone buying Hood at that point, anyone buying Hood essentially on the fundamentals that Dogecoin and, you know, Shiba Inu, people were buying a bunch of on Robinhood, like that's silly. Because like, all right, in hindsight, it's easy to say it's obvious that those things were going to go away. At the time, it looked like, oh my God, everyone's going to keep buying Dogecoin and we're all just going to become millionaires. But it seems like Robinhood and Coinbase are essentially just going to be like they're basically, to me, like the market is, to me, looking at them in the same realm, in the same light, just basically saying, hey, you guys are basically like both crypto trading platforms. And it's interesting because, you know, I'd be curious to see, okay, what if the stock market starts doing really well and the crypto market doesn't do so well? Would Hood go up a bunch and Coinbase not? Maybe. But more realistically, if the market turns around the stock market, that means crypto will probably go along with it. I mean, we've looked at the S&P 500's correlation just to Bitcoin's chart, and sure that correlation has kind of weakened a little bit, especially with the FTX and how weak the crypto market has been. There's been a couple different distinct times in the past few months where the stock market has been trading higher and where Bitcoin's either been trading slightly higher or just hanging out. But stocks have definitely shown a relative strength against crypto, at least over the past couple months. But to me, like I said, the basic point that I'm trying to make here is that Hood and Coinbase, whether you think fairly or unfairly, are basically being grouped together. Of course, today not trading the exact same because Coinbase is trading higher after the company announced some restructuring. So I don't know. I mean, if you're long Coinbase, you could make an argument that's interesting from here. Why would gold skyrocket? Oh, I see someone in the chat trying to pump gold. Yeah, I mean, I've been very open and vocal about my, I think, kind of, I don't really want to say disdain, because disdain might be too strong of a word. It's not like I hate gold as an investment. I really don't hate gold as an investment. Like if you told me you wanted to buy a bunch of gold with a portion of your portfolio, I'd say like, okay, sure, go ahead. Like it's your choice. To me, I've just always said there are other more interesting investment opportunities out there, right? And I know I'm lucky and like blessed to be able to be in a position where I'm, you know, in my mid 20s and can be thinking about like long-term investments, whatever. But I just always think about like, yeah, sure, maybe gold's like a super safe investment. Do I want to be holding a safe investment when I'm 25? Or would I rather throw that money in a company that could end up becoming the next Apple or could end up becoming the next Amazon? Or just throw that money into Apple or into Amazon instead of gold? I would rather do that right now. I mean, and again, it's not investment advice or me saying I think it's silly that if you are going out to buy gold or, you know, anything like that. It's just for me personally, I'm always like, there are other more interesting opportunities out there to me than gold. I mean, you can just look at this daily chart over time. Look at this. I mean, in September 2011, GLD was trading at 185. You're trading at 174 right now. Oh, but Aaron, look, it came down a bunch and then came back up, and it's been up a bunch. It's been up, you know, 100 to 200, up 100% in a couple years. Like, you're missing out on it. Sure, but, I mean, how can you argue, or you really want to get in an argument saying that this is a good, like, long-term investment compared to, all right, so, again, just thought experiment here. Thought experiment. It's September 2011, 10 years after 9/11. September 2011. You can invest in either GLD, Wow, I just put my cursor somewhere randomly. It's actually like September 12th right now, 2011. If you guys could zoom in on the bottom right there, it says September 12th. You guys could invest in either gold or Apple. Gold's making new all-time highs. And this is something that I've talked about on the show before. I've talked about with my financial advisor. He says anytime he starts getting calls from clients, from random people saying, hey, Bob, I want to buy this. Hey, Bob, I want to buy that. That's when he knows that that asset is essentially topped out. And he said in 2010, 2011, it was gold. People were calling him out of the woodworks. Hey, Bob, I want to buy gold. When their portfolios had been just in stocks and treasuries and bonds, no gold, no metals, they wanted to buy gold because it was at all-time highs. So if you were part of that crowd buying gold up here in 2011, pretty quickly, so you bought it at 185, 190, within a few years, it's down to $100. Within a few years, you're down 40% on the investment, and what's supposed to be a safe investment. Now let's go to Apple. In September 2011, same time. Let's go down here. September 2011, same date, September 12th. Let me go down to the date. Apple was trading at split-adjusted $13.78. It's now at $125, and that's with like a 30% drop the past year or so. I'm not saying, just because Apple was a better investment over the past 10 years than gold, that means that has to be the case for the next 10 years. No, it could be the exact opposite. It could be that gold outperforms all the big tech stocks and stocks continue to crash another 50%. And you were an idiot if you didn't get into gold. I just think that's a very negative, it's like a very bearish, mindset to have. And to me, the gold bug mindset has proven time and time again to be incorrect over the past 20 years. And honestly, like, I have no problem. I've had Peter Schiff on the show and asked about it. Actually, kind of funny. This might be like my funniest interview moment at Benzinga. We had Peter Schiff on right before, I want to say, like March or April's 2021 CPI report was coming out the next day. And I was basically asking him, say, hey, look, you and all your gold bugs have been saying for 20-something years, right, that that inflation's out of control, that the U.S. dollar is going to become worthless, and you need to buy gold. And I asked Peter, I said, Peter, why do you guys keep saying this, yet the CPI number stays pretty steady, right? It shows that inflation is kind of hanging right around the 2% mark we're looking for. And he goes on and on and on about how the CPI number isn't real, the government fudges the numbers, all this stuff. Literally the next day was the first CPI print where the number was way hotter than expected. Like, that was like the first day people were like, holy shit, inflation was what the last month? And the market was tanked. And what was Peter Schiff doing? He was on Twitter saying, see, I told you guys inflation was out of control. Look at this CPI number. And in my head, I'm thinking, wait, yesterday on the show, you said the CPI number was fake. But my point was just that for 20 years, right, inflation never really went anywhere crazy. And you had all these gold bugs saying you'd need to buy gold because the dollar's going to zero, all this stuff. And then as soon as we did really see an increase in inflation, they were saying, see, I told you so. I told you so. I told you so. And as inflation comes down, I expect gold to continue to come down. Like, I don't think, really, I mean, think about it. Why do we have high interest rates right now? Because of high inflation. So if inflation continues to drop and we don't have high interest rates, where do people want to then bring their money swing back into? Stocks and speculative assets, not gold. So, although I will say this, say something nice about gold or gold investors. As I always like to do this when I do a little rant, as Kevin says, he loves rants. Anytime I like to do a little rant where I'm really, ripping on something, like I'm ripping on gold right now, I like to just end it by saying, say something nice about gold. Say something nice. I will say this. Outside of, and I've made the comparison before between like how it's kind of like how Bitcoin bugs and gold bugs will both, try to essentially say, and I'm all for having like real economic debates about, should the Federal Reserve be doing this? Is the dollar in trouble? All this. But if you just start saying essentially like fiat money's worthless, the dollar's going to eventually go to zero, like you got to buy gold, you got to buy Bitcoin, you kind of lose. Like, it's almost like fear mongering to me. Like, you got to buy this for the safety of yourself. And I just don't necessarily think that's true with Bitcoin or gold. But my say something nice about gold or gold bugs or gold investors is this. When you have people like Chico Loco or whoever in the chat was saying, buy gold, gold will skyrocket. I never have to worry that people are like trying to, that people are trying to like pump some crypto scheme or pump it, or they're trying to get people to buy gold to influence the price. Because while yes, ultimately at the end of the day, like supply and demand will determine the price of gold, will determine what price gold trades at. The gold market's so big that Chico Loco saying everyone go buy gold, and if we all went out and put all of our life savings, everyone here on YouTube right now, into gold, it wouldn't freaking move the price. So that's why I say something nice is like, at least I don't get the same. I'm not like hearing someone talk about this thinking in my head, okay, they're just trying to pump this asset's price higher. I at least think those people that pump that narrative with gold truly believe it. And it's not some sort of nefarious, oh, if I say this, people are going to buy this penny stock, some Zach Morris type thing. Yeah, and this is a good way to put it. Gold serves its purpose. If you want like a safe physical asset that's going to maintain value, sure, go buy gold. If you want an investment that's going to give you returns, that's going to grow over time, it's not gold. That doesn't mean you can't find certain times to like swing trade gold, or if it's getting undervalued, or if you see certain macroeconomic conditions that are popping up that are going to encourage demand and people buying gold, and you want to try to buy like from where this swing happened from 110 to 190, sure. But I'm saying if you're just looking for an investment that is going to accrue value and give you returns over time, I'd buy SPY 10 times out of 10 over gold. Look, something we can talk about again today is that the Mega Millions lottery is over $1 billion right now. Basically, my point is, if I win the Mega Millions, the Mega Millions lottery, I'm not putting any of that money into gold. Actually, I'll take that back. You win that much money, I'd buy some gold. I actually do want to own like a physical gold bar just so that I can say that I did. Quick rundown agenda for the show today. Here in about 5 minutes, we're going to bring on Andrew Aziz from Bull Bear Traders. Talk with Andrew about what him and his team have been watching recently. As always, if you've got stocks, let me know in the chat. Jay Rice saying FCX, SCCO breaking out, prob on China news. Southern Copper, this is one that we've talked about on the show recently. And by the way, like while we're on the topic of gold, would I rather buy a copper name or a gold name right now? And the answer is copper. And oh my God, I'm so mad at myself right now. It's at $70 right now, Southern Copper. Oh my God, we're gonna go to my Robinhood right now. We're gonna go to let's play. All right, so it's at $70. What did I buy this at? What did I sell it at? Is the real question. History. Bought at 63 back in June. I was early. Wow, why did I buy so much SCCO? I bought like freaking $3,000 worth of this stock back in June. I had no conviction on it. Look, I literally sold it like a week later at a loss. I bought it at 63, sold it at 57. I should have just held. I should have just diamond hands. No, I hate when people say diamond hands. All right, we do. This also is an important development in the Robinhood account. So you'll notice what I just dropped. You'll notice in the Robinhood account, slightly lower dollar amount than we did last week. That's not because, well, I have lost some money. That's not because we've lost a lot of money. Oh, actually, I guess we have. I don't know if that's calculating me pulling money out. So you can see we're still up over $2,500 in the last month. I've pulled some money out, and I've found a way to make my Robinhood account a fully cash account. Robinhood put this capability out a few weeks or months ago. So now I can day trade as much as I want. But because of that, I took some more money out because I said, okay, if I have unlimited trading, I'm probably going to lose more money. So I took some money out, but we still have about $670 worth of cash in the brokerage account to make some trades. And it's a cash account. So now on the show, I'll be more willing to say, like, okay, we can make a trade and hold it for the next, like, 5 minutes. Like, I'm watching SPY right here. If I thought, okay, SPY is going to keep ripping up to its previous day highs of 389, maybe I buy some 389 calls that expire today for real cheap. And shoot, it's going up. I would have made some money real quick. Now it's going back down. But I just want to give you guys that update on the portfolio. So if anyone wants to make any trades or has any trade ideas, let me know. Time to buy gold was in October. 100% agreed. You can see here, I only made one trade this morning. I bought some like YOLO SPY calls that are down pretty good. I was basically just hoping for a little rally, hoping for that strength to continue. All right, let's get our Benzinga Pro pulled back up. And then Andrew Aziz again should be joining us any minute now. Other headline I saw today, not really as like stocky related, because but a few weeks ago we talked about it on the show, Trump's NFT project. Saw a headline today that the NFT project has decreased 99% in trading volume and value. So it seems like most people that bought those NFTs, I think they came out on December 17th or December 16th, so a little bit less than a month ago on Trump's NFTs, has been kind of a total disaster. Again, I'm not really sure if there's any market implications. I haven't checked out any of these like NFT plays in a while that were on the market for a while, like Dolphin Entertainment, I remember was a big NFT play. Even like auxiliary NFT plays. I remember Playboy came out and made a big deal about their NFTs. Stock is down to 257. That actually, I will say this. So Playboy's value, okay, the market cap is 120 million. The enterprise value is 320 million. Playboy's essentially only like value as a company right now is its like logo and licensing, branding, licensing rights. I've talked with Ben Cohn, the CEO. I don't know if he's still the CEO, honestly. I don't know if he's still the CEO. But I've talked to Ben Cohn on the show before about how important that logo and branding is, especially with things like streetwear in China. Playboy clothes, like just having the logo branded, is like a very popular streetwear item in China and other parts of the country. And that is really like the main value of the business. I think they tried a bunch of these different things. They tried all these different things. And basically, like, I really do think if the company went hardcore cost-cutting mode, figured out how to just monetize off its logo and licensing, it actually probably has a lot of deep value here. And I wouldn't be surprised to see some sort of like activist investor come in, buy, say, 10% of the shares. It wouldn't be that much money right now. It'd be, what, $13 million to own 10% of the company, or 10% of the outstanding shares, and say, okay, here's what we need to do. Clothes are popular with the logo on it. Okay, let's figure out how to scale that and screw everything else. And that's what I would be doing if I were in charge of the company right now. I think the company probably is figuring out how to cut a lot of costs. I don't know how much money they put into the NFT projects or stuff like that, but hopefully, you know, not too much or not too much committed. UAA is threatening to move into a big gap from a while ago. It's United Airlines. Oh, Under Armour. Let's see if I can find the gap you're talking about. Oh, I see what you're saying to the upside. Yeah, I mean, I don't know. I guess, like, I think a lot of these retail kind of clothing names, whether you look at Nike, whether you look at Lululemon, whether you look at Under Armour, have taken a big hit. And I don't know, like, what Under Armour is doing right now, essentially to differentiate itself from other players in the game, differentiate itself from Nike. But from a just purely technical perspective, you do kind of have this like double bottom, like someone pointed out in the chat, potentially this gap filled to the upside. So I don't hate the way the chart's looking. And just from a fundamental perspective, I mean, like, The stock was at 53 bucks. It's down to 10 bucks. What does Under Armour do? They make tennis shoes and like athletic wear. Do I think Under Armour or a small economic recession is going to put Under Armour out of business? No. In fact, like, I don't know. Maybe people buy more athletic wear in recession. I really don't know. I mean, how did Under Armour fare up in 2008? Let's see. Zoom in here. Looks like it was a really small stock, so it may be hard to tell on the chart. Oh, no, it does not. So, I mean, yeah, like, the stock got hit with everything else. September 08, it was at, this is all split adjusted probably, but 68 cents, went down all the way down to like 18 cents, came back. I mean, look, bottom line is if we have a recession, people are going to spend less money. Probably means people are going to spend less money at Under Armour. But if you were trying to buy it long term and hold it forever, and I don't know that much about this company, right? I assume it. The person who was asking about in the chat is asking about it from the chart perspective. Like I said, I do see, what you're talking about, that potential gap fill, potentially a nice little double bottom here. I don't hate it. If you were thinking about buying Under Armour long term, I would only really consider doing so if you had some sort of conviction about like, why do you like Under Armour more than Nike? Do you think like their quality of clothes is actually better and it's just a matter of time before the consumer catches up? And essentially I would want to know what the story is, what the conviction is behind it before I would make like a long-term investment into it. But alrighty, guys, I see our first guest hanging out in the backstage, my man, Andrew Aziz from Team Bull Bear Traders. Once I get a thumbs up or something from Andrew that he's ready to go, I'll go ahead and give him our special intro. And we'll go ahead and bring him on the show here. Excited to chat with Andrew. Let me go shoot him a message here in the private chat. All right. Beautiful. All right, ready to go. Let's go ahead and give Andrew our very special intro and chat when we come back. What is up, Andrew? How you doing today?
I'm doing good, Aaron. How are you?
I'm good.
Tuesday.
Happy Tuesday. So I've been on your show before, but I don't think you've been on my show before, correct?
No, this is the first time. Yeah, thanks for having me.
Yeah. Thanks for coming on. I had a pleasure coming on Bull Bear Traders with you guys, so it's nice to have you on here. So what's been new with you? I mean, new year, how are the markets looking? What have you been watching?
Well, the market actually was really nice the last week in trading wise. Obviously, it's still a nightmare for investors. But as active traders, people who are trading equities or options, we have had a really nice last couple of months. Recently, with the volatility that Tesla is bringing us, there's a lot of trading opportunity right now. So overall, I think 2022 was a nightmare for investors, but an amazing year for active traders. And I think 2023 is going to be like that as well. So a lot of trading opportunities. But if you are a long-term investor, you really are being tested to your patience.
Yeah, and I think that's what's really tough right now is, like you said, for long-term investors, people that may, contribute to their retirement account and into the market, say every 2 weeks or so, are hitting a point where they're like, why am I putting money into the market every 2 weeks? It just keeps going down and down and down and down. I mean, what would you say to those people, Andrew?
That the market is going down. I think the market is actually very, very simple to understand what's happening with the markets for long-term investors. Like everything is right now driven with the price stability. Like Federal Reserve wants to cool down the inflation, and that's the only thing that they have on the agenda. And as long as the inflation stays above 2% targets, the financial tightening is going to continue, and that puts pressure on the growth company. However, I think in the next 6 months that we are finding the bottom and the price really actually meaningfully cools down, then there is a really good potential for really growth companies. So I would personally think the market is going to find in the process of finding the bottom. It stays maybe flat but very volatile until we really get a meaningful reduction in inflation number. And then that's the time that really growth companies like NASDAQ, for example, that can start going up and shoot up for big return.
Got it. So do you think, for you right now, like if you had to put some money into the market, would you be taking a stab at some of these growth names like Tesla that have been beaten down so much, or maybe some of the ARKK, Kathy Wood names, or even just big tech stocks in general like Microsoft or Apple? Or would you be looking more for like value, kind of quote unquote more boring stocks?
Yeah, so I mean, my really depends on the investment philosophy. My fund and my own trading account and my own investment is really never invest on one single stock. Like for example, Tesla. Tesla is a blue chip company, but it's really trading right now at like a penny a stock. Not a penny a stock, but a really high float, high beta stock. And I personally don't like to invest in any individual stock. So I would look at the indexes like Nasdaq, for example, QQQ, which is the diversified 100 non-financial company in Nasdaq. I think there is a potential if you want to enter them. The market, you can actually, I think, is a good opportunity. You should expect a little bit of a more drop until the inflation really comes down. But if your horizon is really up, talking about 5 years investment, I think it's good to enter the market now slowly, maybe in different, partial, like you can enter 50% now and then another 25% 2 months and another 25% in 6 months. I think that would be a really good buying opportunity. Yes.
Got it. And yeah, and the way you break down the market, obviously trying to make it very simple, talking about the Federal Reserve wants price stability right now. That kind of puts us as investors or traders, Andrew, in a position where we're kind of thinking like, okay, do we think inflation is going to keep continuing to come down? Do we think it's going to stay higher for longer? And that becomes the big question. So we have CPI inflation
Tomorrow.
numbers coming out, or is it tomorrow or Thursday?
I think, yeah, Thursday. Sorry, I thought it's the Wednesday today. Yeah, Thursday. Yeah, no, Thursday. You're right.
So we got the CPI number coming out Thursday. Do you have any like bold predictions? Do you have a trading plan if the number is hotter or colder than expected? What's your plan?
I personally don't have any really guess on it. I mean, nobody really knows exactly. I think we have a good ground for cooling down the inflation. I think the energy prices and commodity prices have come down significantly. Obviously, the high interest rates have put a lot of pressure on manufacturing and some sectors like real estate. So we have some really nice grounds to get a lower inflation. The previous reading was 6.1%. The economists are expecting 5.7%, which obviously a decrease toward the right direction. If we get any surprise into any direction, then we can actually see a big drop or big rally. If the inflation comes down like 5% instead of 5.7, or a little bit lower than what economists are expecting, then we might actually get a big rally up. And if the inflation actually goes into the opposite direction, if it comes out from 5.8 or 6%, then we definitely can have a bigger drop because that obviously gives more reason for Federal Reserve to increase rate or be more aggressive.
Yeah, and of course, last time we saw that huge rally. I mean, I think the S&P 500, I want to say, went up like 3.5 or 4% that day.
Nasdaq went up 7%. That was a big rally, yeah, in one single
I know.
day.
So you're talking about like 4 to 5 standard deviation moves.
Yeah.
But now the way I see it, Andrew, is that was a big surprise because like maybe inflation was expected to stay steady or come down a little bit. But now the expectation's really for it to like continue dropping. So the bar is set a little bit higher to where even if it comes in like at expectations, I don't know if we're going to see as big of a rally. I think we'll still see the market respond positively, but I don't know if we'll see the same 7% up on the NASDAQ response.
That would be nice if you get that, but yeah, I agree with you. 7% move on an index like Nasdaq is definitely not something that happens every month.
Just because, yeah, I mean, and then like I said, just because like then now the expectation is shifting that inflation is going to continue to fall. So one thing I've been watching for that, Andrew, is the U.S. gas prices. So this is from AAA, and we're now in a range where the current gas average is $3.27 a gallon. Actually cheaper than it was a year ago. So for a while, gas and energy, like you mentioned, were like some of the biggest drivers of inflation, and now those are coming down. And what we've seen in recent CPI reports is that rent and like shelter prices are now some of the biggest drivers of inflation. So what I'm going to be really curious about, Andrew, in this report is looking at that rent number. Did rent inflation continue to increase? Because if so, I'm not going to like that, because that's the kind of one of the big drivers recently. If rent prices show that they've dropped or start stabilizing, and everything else like gas and food prices start to come down a little bit, then I'm going to see that as a really good sign.
Yeah, that's definitely good too. I mean, as a trader, I personally learned that really market is always right, and you trade the price action. So, yes, we are all a speculator in some way, but if the people that your audience are really want to actively trading, you have to look at the price action. The CPI number and what market is reacting is like an earning for a company that you really don't know until you see the price action. I personally am staying on the sideline and see what that CPI number gives us in the morning, and then we trade the price action. If it's going up, we trade it long. If it's weak, we trade it to the short side. And that this is the best. Always, the market is always right. We can discuss this to death and going up and down with all sorts of analysis, but at the end of the day, market is going to tell us what it thinks about this number.
Yeah, and I love that, Andrew. So you're saying, look, we could sit here all day and try to guess what the CPI number is going to be. We could try to guess not only what the CPI number is going to be, but how the market's going to react to that number. Or we could sit here and just say, hey, I'm just going to sit here and wait. And then once the market starts reacting, I'm going to look at that. I'm going to look at the chart. I'm going to look at the price action and have an educated guess on where I think, it's going, and then make my decision there. So, I like to do both though, Andrew. So I'm glad you entertained me, and we were able to talk about some of those, I guess, fundamental catalysts, even though I know you'd rather talk about the charts.
Yeah, exactly. I think, again, really depends on the strategy. If you are an active trader, you look at the price action. Just the price tells you which direction you should trade. If you're a long-term investor and you're, on a long side, on a buy side, then definitely you should just have a little bit of a more horizon. I think in the macroeconomic right now, we're seeing we are going into the right direction. Obviously, it's a very, very tough time, the financial tightening and raising interest rates. But if your time horizon is like 5 to 10 years for investment, then I think we are not really have anything that should be too concerned about it. This business cycle is like all other business cycles in the past is going to pass on. And it actually can help a lot of companies like S&P 500 companies, the resiliency that they're building. And that's one of the really interesting things that we're seeing right now is in this earnings season is that how these companies actually reinvented themselves to be resilient toward this high interest rate and, the shift in the consumer behavior. Because a lot of people are right now, because of high inflation, a lot of customers are changing their behavior. They're not, spending the money the way they were spending in 2020, and now these companies are actually have to adapt to this environment. I think we're going to see a lot of nice resilience in S&P 500 companies. It means that they kept their earning profits, and that shows that how amazing these companies are. So these business cycles overall are really good for economy and for the companies. Let the zombie companies die, and only solid companies that are really, producing cash flow and solid, and the type of company that Warren Buffett like, those are really survive and thrive.
Yeah, and that's a good point, because I mean, anytime we talk about higher interest rates and we talk about slower growth and an economic downturn, it's so negative. But the point you're bringing up, Andrew, is that there are silver linings, there are positives to come out of it. And if you think about it just logically, the way I'm thinking about it at least, for say the big FANG companies, right? Apple, Amazon, Netflix, Google, Facebook, when interest rates are zero and the stocks are making new highs every day and investors are happy and every earnings report is new all-time highs for quarterly earnings and revenue, there's not really a much incentive to shake things up and continue to innovate and continue to grow or become more of an efficient company for those shareholders. In tougher times, you're forced to do that. If you're a company, you have to say, okay, well, if we're Apple, things are about to get tougher. What can we do to make sure we stay number one? And then they start doing those things that maybe they wouldn't have been doing in a more cushy and an easier macro environment.
Yeah, that's a very good point, Aaron, you mentioned, and I actually enjoy that. There were companies like Uber or DoorDash that, the fundamentals of their business models were flawed in a way that you need free money or zero interest rates to run these companies. And it was not fair to them because, 10 years of free interest rates and free money, you never really incentivize or motivated these companies to become profitable. Now in this environment, in 1 or 2 years of bear market and financial tightening, if the Uber can survive, if DoorDash can reinvent themselves and become profitable, then these are the solid companies that can stay for generations and continue their disruptions that they're having. So I think there are really, as you mentioned, there are really good points in having these business cycles, and make the companies are really back to their core, the business models and who are they serving and how they can survive.
Yeah, 100%. And yeah, that's what you bring up a great point with the Uber and the DoorDashes. I mean, especially for a lot of their business models, like you were saying, were reliant on subsidies from VC and private equity investors that were basically giving them free money, and then they were able to make the rides cheaper. And now it's like, okay, now they can't do that much anymore. And you can see the stock price doesn't love Uber as much as they did a year and a half ago. All right, Andrew. So what about in terms of just outlook for, I know we can talk about the charts and the technical analysis, but are there any sectors that you've been seeing like, significant strength in? Like, have you been looking at the XLE energy chart? Have you been looking at any of these sectors that you think, okay, 2023, is going to continue to be good for energy or continuing to be bad for biotech? Like any of these kind of bigger industry trends?
I think the sectors that are a little bit more resilient to business cycles, like utilities, are generally perform better. And as you see here in the main indexes that we are having, you see that Dow Jones, which are about 30 companies that are really value companies, it wasn't really dropping that much, even though 2022 was a horrible day in terms of bear market. But the Dow was down, like, how much was that? Like, around between 10 to 15%. It wasn't really that much of a bad drop.
Yeah, we're hanging out on the Dow. I mean, the Dow's high ever, January 2022, was like 370. It's only at 335 right now. That's not even that big of a drop.
Yeah, it's really not that big of a drop. So any sector that are resilient to business cycles and a downturn economy, like utilities, Dow Jones that has a lot of utility companies in there. So utilities and healthcare is going to do well. Energy is a little bit tricky because energy is, you have this geopolitical situation as well in there. So any sensitivity toward this politics in Europe or Middle East can impact it. Also, energy is going down with the business cycle. So the demands for the energy is coming down with the slowing down the economy can impact it. So it's a little bit of a more complex sector, energy, especially with the politics that you'd never know, somebody attacked someone somewhere in the world. But I would say really probably healthcare and some utility sector is going to stay strong this year until we pass this business cycle phase.
Yeah, and that's a great point with the XLE or energy just kind of being exposed to the overall global macro conditions. And I've been watching the XLE, Andrew, almost every day basically because of this. Because to me, the fact that XLE is basically trading at or near its all-time highs is so interesting, considering like the rest of the market isn't, and we're kind of all weighing this big this global economic downturn. So in my head, I think like one of either two things needs to be true. Either A, energy really is, the demand's pretty good for energy, and maybe this big global recession that everyone's worried about isn't as serious. Because if we don't see a huge drop in energy demand, then I'm not that worried about the economy, right? The higher energy demand is, the higher, people are doing business, people are traveling, whatever. Or the second part could be that this thing's about to drop off a cliff when that recession does like get here and hit. So I think either one of those things has to be true, that either the market is going to catch up with XLE and come back up, or the XLE is going to come down a lot. Either way, I think there's a trade to be had. So I've been watching XLE and kind of how the markets are, I guess, the relationship there, if that makes sense.
Yeah, it does make sense. I mean, market has already priced in the recession in the economy. So market is always...
But what I'm saying is it doesn't look like that in energy. I mean, look, Andrew, look at the XLE chart right here. The highs ever going back was like 100. We're at 87 right now. So we're about, 13% off the highs. Look at what the XLE did in 2008. It dropped off this cliff. So to me, the energy markets have not priced in a global recession yet. Otherwise, why in the hell would this thing be trading at or near its all-time highs?
Energy is a little bit of a different animal, because the supply and demand is also changing. You have to also look into the fact that the supply of the oil is every month is going to be decided by the OPEC and the big producers. And it's a little bit of an maybe not apple to apple comparison. If you see, okay, in 2013, why the prices were so high but the gas was so cheap, and now why the price of oil is so low, why the gas prices are at all-time high, because it's a very, very, very complex sector. We have the OPEC and the production, plus energy sector has been beaten down in the last 10 years because of the climate change, and is known as a sector that is dead, and there is no future for it, and it's going to be replaced. Therefore,
right. Jim Cramer called it uninvestable.
Exactly, uninvestable. So what happens to these companies is, these companies are not going to invest a lot on their operation, and what they do, the money that they're making is returning it back to the investors as dividends. So they're really high dividend companies, but they're really not the growth company, because they're just, the investors are not expecting these companies to exist for the next like 20, 30 years. Therefore, that's why when the oil prices are not at all-time high, but our gas prices are all-time high, because this field has been underinvested in the last 10 years. These companies are just not investing on big operation, big extractions, and big refineries anymore, because just nobody expects them to exist. So it's a little bit of a Excel is a little bit of a beast to really analyze. Again, we can sit down and analyze it to death, but really at the end of the day, we have to see what the OPEC is doing, what the war in Russia is doing, what Middle East stability is doing, and see, eventually we'll see what the market is doing. I was never really heavily invested or trading XLE, just because I really never tried to make sense of what's the fundamentals behind moving these energy sectors.
Right. Well, I think that's a great point, because here that's why I bring smart guys like you, Andrew, on the show, is because in my dumb, silly brain, I'm thinking, okay, if energy is doing well, that means the economy is doing well. If energy is not doing well, that means the economy is not doing well. You're saying, hey, Aaron, it's not that simple. Take example, the Russian and Ukraine war. We've had a lot of supply side issues with energy. So even if demand drops a little bit, the price might remain high or stable, because we're seeing that supply drop as well. So that's a great point to bring that up, Andrew, that maybe, it's not the same situation we were at in 2013 or 2008. And your point about the gas companies themselves is a great point, because that came up with when the Russian-Ukraine war hit. Everyone was saying, why don't we just increase our domestic production? And it's not that simple. And a lot of people wanted to make it a political issue, or say, Biden this or Trump that. But at the end of the day, the companies themselves have made the strategic decision to say, we're not going to spend all this money we're making continuing to try to grow our operations. We're going to take that money and return it to shareholders.
Yeah, exactly. I mean, let's see what the shareholders decide to do with that money. But we definitely de-incentivize energy companies for expansion and for growth, and we incentivize companies like Tesla, that they're promising a new energy ecosystem. But overall, really, at the end of the day, you have to look at what the market is doing. I think
100%.
for a lot of individual investors, not talking about traders, investors, I think S&P 500 or a form of S&P 500 would be really good long-term hold. Because when you're looking at a SPY, S&P 500, again, S&P 500, after all that happened in 2022, really closed just below 20%, which is a reasonable drop. And it's 500 companies, they're market cap weighted, and they include all sectors. And it's not only the U.S. economy; it's all the world economy. Like S&P 500, 40% of the revenue is coming from global economy. So if you are an investor and you're looking for a good deal, I think probably S&P 500 is over the long term is the best you can do. Again, as a retail investor, you're not a professional and you're not really under any mandate by your fund.
Well, even if you are a professional, the numbers of the percentage of like financial advisors or portfolio managers that beat the S&P 500 is so small. Like, Andrew, I have so many friends that have reached out to me basically asking, like, I want to get going and investing. I want to start doing this. Granted, I got a lot more of those calls a year and a half ago when the market was at all-time highs than I've been getting recently.
Yeah, 100%. Like look at Cathy Wood, for example. Over the 5 years, I think her fund is down -2%. So it's just, yeah, as you said, even if the professionals are having a hard time to beat S&P 500, the professionals have a little bit of an issue because they're always under a mandate of their fund. Like Cathy Wood, for example, a lot of people say, okay, she was a god and now she's not. But the problem that she has is that she has to follow the mandate of her funds, and mandate of her funds, ARK, is just the growth and disruptive companies. And it's not her fault that is an environment that is just nobody wants growth and everybody wants survival and the value companies.
Yeah.
And if the market regime is changing, then her fund might actually outperform S&P 500 or a lot of value companies. So the problem the fund managers have, they have to stick to the mandate of their fund. But overall, I think retail traders, if they go into the SPY or a form of SPY, either the Vanguard ETF that you mentioned or leverage products that get a little bit of more exposure to S&P 500, would be nice to get there. And that's only, again, for investors. For traders, obviously, you're looking for the pockets of volatility and whatever that gives you that opportunity to trade.
100%. I couldn't agree with you more, Andrew. And that's what, when my buddies call me and they say that, I say, just set up a recurring investment into SPY or into VU. So I always tell people, and again, this isn't investment advice, this is what I tell people. If you're trading SPY or like trading options on SPY, SPY is the one to do it, SPY, that ticker. If you're buying and holding, I actually like VU a little bit more than SPY. It's the same thing, right? The returns are going to be the same, but holding the VU, it's slightly cheaper, and I think might pay a slightly higher dividend if I'm not mistaken. So like for me, example, in my portfolio, I hold shares of VU, not SPY, but it really doesn't matter. To your point, Andrew, it's just you're going to get exposure to all the different things. So say healthcare sucks in 2023, but energy's doing really well. Well, guess what? There are some energy names in S&P 500. You're not going to get crushed that hard. It's just the way to go. It's so easy. You're not paying fees to a money manager. And chances are that fund is going to outperform that money manager anyway that would have charged you fees. So, I couldn't agree with you more.
Aaron, here's another thing is that I had a lot of FOMO, for example, crypto is moving, or NFT, or the metaverse. There's a new thing that is coming that you think you're losing on it, but eventually, if the metaverse becomes a big thing, all of these S&P 500 companies are going to be in there. Like Meta is in there, Google is in there, Amazon is in there. So you're exposed essentially to every asset class in one way. Like if crypto becomes a huge thing, I'm sure that S&P 500 companies are going to somehow in there, they take a position, they take some of their assets in there. So you're not really having any FOMO on any sector, because it's all in there. Maybe you have a little of a diversified exposure, but you are in there. And if you buy a SPY and the world goes down to hell, all asset class are going to go down to hell. It's not that you are just holding something that is only loser, everything else is going up. Like I'm sure the real estate is going to come down, continue to be under pressure. So if you don't put your money in S&P 500, what do you want to put? Put it in real estate. Still, that market is also under pressure. Right now, we're seeing all the assets are kind of having same correlation, and all of them are under pressure just because we are going through a business cycle.
Yep. And Andrew, again, I can't emphasize just how much I agree with everything you're saying right now. I'm almost shocked at how much I agree, because usually, people want to make things more complicated than they are. I'll put it this way, right? The Mega Millions lottery is at like 1.2 billion. If I win that tonight, I'm putting in like 90% of the money I win just straight into SPY. I'll donate some money. I'll buy my mom a house. The rest of it just goes straight into SPY. I could live off the dividends from that for the rest of my life. You wouldn't have to do anything, and you wouldn't have to pay a money man, whatever. Although with that much money, you probably would want to hedge that position. So you probably would want to hedge that position somewhat. You probably wouldn't want to just sit on 500 million in SPY and be exposed to any, market downturn. I don't know, but we could talk about that if that happens, if I win. And then Andrew, you could help me manage that. But I've had you on the show for a little bit longer, about half an hour. I don't want to keep you too much longer, but before I let you go, do you have any specific names, charts you've been watching, thinking like, okay, this is really interesting, this setup, or Have you kind of just been like on a day-to-day basis trading whatever is moving that day?
No, I'm actually looking at Tesla to see if Tesla potentially is going to go break the 100 level or not. The Tesla is definitely is under pressure and it's going to continue going under pressure. It has a little bit of a, we have the soft sales price in China, rising interest rates, and obviously the competition is really picking up with Tesla. Tesla's earning is going to be interesting this quarter. I think Tesla has a case to go a little bit lower than that. Again, remember, even Tesla at these prices, the PE of the Tesla is around, I think it's still trading around 20, price per earnings. So when you compare it to the other car competitors, like Ford, for example, the PE of Ford is about 5. So Tesla still has some room down to go down, and maybe the fair value of the Tesla, considering there's no growth or no future revolution, maybe it's trading around $80. Maybe that would be some sort of a fair price. So Tesla is on my watch, and as soon as I see that the market is moving toward to the upside, there's one ticker that I really like. It's called SSO. Is the 2 times leverage of a SPY. So if the market starts really moving, into the right direction, I might actually flip my position to the SSO, to the leverage of a SPY, to get the move up to the upside. Leverage products are really not good when you are actually on a downtrend, so below the moving averages on a downtrend. But when you actually flip the market regime and you come above the moving averages, then some sort of a leverage product is not a bad idea to get the ride up.
Yeah, and again, with the leverage products, I mean, maybe not great for like long-term investors if you plan on just buying and holding and not looking at it, right? So maybe if you're more actively managing your portfolio, it's easier to trade and kind of swing some of those leverage products.
Yeah,
But
100%.
yes,
So leverage products are a little bit complex. I've had a lot of success, and also the biggest losses that I've had so far in my trading and investing on leverage products. So, you got to be really careful. There are different animals, and definitely they're a little bit more sophisticated for traders.
100%. Yeah, on the Tesla, so it sounds like if you had to pick a directional trade on Tesla right now, you're leaning more toward the short side than the long side. On the fundamental side, I mean, first of all, from just a chart perspective, this chart looks awful. You could say, okay, maybe we've got some support back here, but like you said, if you break through that 100 level, not really a lot of support there until you get down to 80 or 62 even down here. But from a fundamental perspective, when we got the news last week that Tesla's cutting its prices for cars in China, completely anecdotal. This doesn't mean anything from a statistical or number standpoint. I was driving back this weekend, Andrew, from Chicago to Detroit, and passed like a Tesla dealership in a really nice part, like a nice suburb of Chicago. The parking lot was completely full. Like it looked like as many cars as they could have on the lot they had, as if like the inventory was completely full, not a single car had been sold. So again, I'm not saying that matters or means anything, but when I was driving back and I've already seen the stock get crushed, and then I saw that, I was like, oh boy, that could be trouble. So this one will be certainly interesting to watch, not just because this is like the retail favorite stock to watch, Tesla, but because now it's a big weight in the S&P 500. I mean, when you first came on, you talked about the volatility that Tesla is bringing us. A lot of the volatility in SPY right now is from Tesla. So this is going to be a very important move to watch over the next few weeks, because if Tesla does break that 100 level and drops another 20-30%, it might not matter that inflation comes down a little bit more. SPY could be under pressure from that.
Yeah, Tesla is definitely not following the macroeconomic right now, because Tesla obviously is a luxury car, and the luxury items in the business cycle are not doing well. Tesla also have the issues with exposure to the China, so the economy with it going up and down in China is going to definitely be impacted. The same sort of exposure that Apple also has. That's another thing. Plus, also you should remember that Elon Musk has a lot of loan, secured against his shares. And if the Tesla drops continue, then it actually can trigger a margin call and force liquidation toward his own loan to purchase. So that's also another element that it can be like a crescendo of selling pressure on Tesla. But that's why it's my least company for invest. But definitely it's been amazing for trading in the last couple of It's just starting from December has just turned out to be an amazing trading vehicle.
Yeah, and I will say, even though Tesla is now a big weight in the S&P 500, at the end of the day, it only makes up, I want to say, like 0.5% of it or something. So
Yeah.
there is a case where Tesla could continue moving lower, where the S&P 500 actually, goes up or is able to hang out. I'm just worried that the more Tesla drops, the more other names might trade with it. The more just pressure, I think, SPY will be under. But either way, I mean, Andrew, in terms of just overall macro outlook things, I mean, in my view, things actually are looking a little bit better than they were, say, 6 months ago. I mean, 6 months ago, we had so many question marks, of course, with the Russia-Ukraine war, but again, more so with China and what's going on with COVID, all these things. I mean, do you not feel a little bit more at ease than you did a few months ago, or you think, no, we're still, just as likely to see the market continue to crash or a big recession?
Yeah, well, I don't think really market is going to crash. I mean, we might be under pressure, but the crash of the market happens only you have a very big systematic risk in the markets. I don't think we have a systematic risk that the banks fail or something really broke down, that the whole system collapsed. Even if crypto collapse of FTX and that situation really didn't impact the whole financial system in a way that crashed. We might continue to be under pressure, and continue under pressure means that if you look at the SPY chart, slowly trending down, and that's just the nature of a business cycle. It's not like a pandemic or 2009 when the big banks were falling down. So we don't have any of that systematic risk. But what we do have right now here is just the pressure and financial tightening. So we might continue going down. S&P 500 might correct another 10-15%. It all goes into how much interest rates are going to be high and for how long they're going to stay high. So market can stay in this volatile but a slow downtrend. But I'm not really concerned about a big crash or collapse of the economy. But as you mentioned, we know that the war in Russia has slowed down, and it seems that everybody in the Europe also want to end this nonsense war. And I think overall China stocks, if you look at BABA or a lot of companies like KWEB, China, it seems that they have actually reversed and they're going into the bull market. They started actually an uptrend. So I think the China economy is slowly stabilizing, and the whole Asian stock market is going to rebound. And I think we are soon to find a bottom in the market and start the next bull market.
Yeah, and I'm with you there. That I think even if macro conditions, stay tough for the next, say, 6 months to a year, I don't know that necessarily means the market's going to absolutely crash. I think a lot of what we see, I mean, look at the SPY chart right now. We're still down like 20% from our highs. A lot of that 20% is because of those things that we're expected to see the next 6 months, right? Earnings be a little bit lower, all these things. So I don't think just because we might see spending drop over the next 6 months, that necessarily means the market's going to crash. Because guess what? The market already knew all that stuff was going to happen and was pricing that in 6 months ago. So Andrew, I thought this has been a great discussion. It's good to see where your head's at in the new year, kind of see how you've been trading your strategies. Anything else you want to chat about today that we have not gotten to?
No, I just want to say that we've seen a really nice market for trading. For those of you who are new into trading, I think this is a very nice volatile time of the market. Obviously, risk management into the volatile environment is more important than ever. But make sure to educate yourself, and if you're an investor, just make sure you have a solid plan for your investing, and of course, patience. This business cycle is gonna move on, and we're gonna get better, time for investors as well.
Awesome. Well, Andrew, thank you for hopping on Benzinga Live with us today. I'm going to go ahead and drop the website for bearbulltraders.com in the chat if you guys want to go check that out. You can also check out Andrew on YouTube. I'll drop that channel and link in the chat. Andrew, you got to get me back on the show soon. We got to do a nice little a trade. You come on my show, I come on your show.
Yeah, I love that. Hopefully soon. Thank you so much, guys.
Of course. Thank you, Andrew. All right, guys, everyone go give Bear Bulls Trader a follow. Shout out Andrew Aziz for hopping on the show today. Good conversation. Love talking to Andrew. We've got about 20 minutes of the show left. One thing that I wanted to kind of talk about today, bring up, was an article, I believe, from Mr. Chris Kachi himself, hailing from the great state of Michigan. Let's go ahead and get this article pulled up. This is kind of a nice little 2023 retail investor recap article. The top 10 most searched tickers on Benzinga Pro in 2022. So where do SPY, Tesla, Apple, and AMC rank? So guess what? We gave you 4 out of 10. That leaves 6 out of 10 names that we do not know what they are. I'm going to let you guys try to guess. The remaining 6 names. We've got SPY, we've got Tesla, we've got Apple, and we've got AMC. We've got 6 other names that were in that top 10. I want to see some guesses flying out of the chat. I know there's a slight delay here for the chat, so I'll let some time roll in for some guesses, and then we'll hit that in a second. All right, do we got any guesses flying in the chat? I've not seen any yet. All right, got some good we got some good guesses coming out in the chat from Edson, AMD, GME, Nvidia, Baba, QQQ, Amazon. Full disclosure, I have not looked. I don't know. I'm gonna go ahead and guess, Edson. I'm gonna go ahead and guess. You might be dead on, honestly. You might have cheated. You might have looked. I don't know. I'm not gonna accuse you. Innocent till proven guilty. I'm gonna go ahead and guess GameStop's in there for sure. I'm going to guess Nvidia's in there for sure. Now, okay, AMD's probably in there for sure too. Baba, QQQ, Amazon, I'm less so sure about. You know what, Edson? I'm gonna challenge you here. I like your picks. I'm gonna keep most of them. I'm gonna switch out Amazon for Netflix. The only reason I think that is because Netflix price action was a little bit crazier last year. So that might mean that we had a few more people searching on Benzinga Pro for Netflix headlines. You say, no, I didn't look it. I know, I was just messing with you. I was just saying how good your guesses were. I wouldn't be, or it wouldn't shock me, I guess, if those all ended up being right. So, all right, Apple, Meta. Okay, so that's another good one, Meta. So do we think Meta's in there or not? We don't have, enough slots for AMD, GME, Nvidia, QQQ, Amazon. So do we think maybe... Let's collaborate on a final guess before we look. I'm going to say, Edson, we're going to take your GME. We're going to take NVIDIA. We are going to take... Do we think QQQ is in there for sure? We know SPY's in there. I'm going to go ahead and say yes. I'm going to say yes, QQQ's in there. I'm going to say yes, Netflix is in there. I'm going to say... Ooh, Kevin, that's a good point. I don't know if Bitcoin counts. I'm gonna go ahead and guess and say Bitcoin does not count. I'm gonna say Bitcoin. We're talking about stock tickers here. I could be wrong. There could be some cryptos in there. All right. So right now, my list for the remaining 6 names we have. I have GameStop for sure. I have Nvidia for sure. I have QQQ for sure. I have Netflix for sure. So I have 2 more slots. Names I'm considering in the final 2 slots. Not Netflix, sorry. Baba. I do think Baba is a very big contender for one of the final 2 slots. Like Netflix, Baba had some pretty crazy price action throughout 2022, which might increase the search traffic on there for Baba. Google, another good guess. Let's go back to Edson's original guess. So Amazon and Baba are the 2 that I don't have on right now. Oh, and AMD. Okay, so basically the question is, what do we think the final 2 slots are? So I'm going to go ahead Here's what I'll do. I'm gonna write down my guesses so I don't forget them. I'm gonna go ahead and put some options that I want people to vote on in the chat. What you think the final 2 slots are? So these are ones that I'm in between that aren't in my list, for sure. No, not necessarily crazy pumps, because if you think about it, crazy pumps are typically only like 1 or 2 day pumps, right? So if you think about like GTSB or whatever that crazy one is that went up like 1,000%, or NRDM or whatever, like a few months ago, those only last like a day or two. So I don't think, those are necessarily going to be on there. So we're voting for the final 2 slots of the top 10 tickers, what we think it's going to be. We don't know if we're right. These are names that I'm considering for the final 2 slots, have not decided on. Baba, Disney will throw in there. Google will throw in there. Amazon will throw in there. AMD will throw in there. And then if anyone else has any, Coinbase. So pick 2 out of these. Oh man, the way I did that did not look good. All right, we'll try it with commas, because I had it separated in here a different way, but it did not work. Disney, Google, Amazon, Coinbase. So pick 2 out of the 5. Okay, or Microsoft. Throw Microsoft in there too. 2 out of the 6. Throw Microsoft in there too. Baba, Disney, Google, Amazon, Coin, Microsoft. And we'll make it a little interesting. If I'm gonna guess at least 4 out of the 6 right. If I go 0 for 6, I'll do the whole show tomorrow with my shirt off. If I go 0 for 6. All right, so Michael Russo's going Coin, Amazon. So those will be our 2. We'll see if we've got any other votes flying in. For anyone who's just joining us, we have this article pulled up, the top 10 most searched tickers. We've got the first 4 in the headline, SPY, Tesla, Apple, AMC. We're trying to guess the last 6. I have 4 that I'm for sure putting in my last 6, 2 that are up for grabs. Out of these 6 names, Baba, Disney, Google, Amazon, Coin, Microsoft, and get a big chest tattoo. We do have someone at Benzinga that got a big chest tattoo during one of our events in Miami. I'm not going to say who it was. Maybe we'll leave that for a future show. All right, I'm growing impatient. I'm going to look soon. I haven't looked yet. I haven't made my final decision on the final 2. I'm fine with going Michael Russo's guess if we don't get any other ones. All right. Can I get a virtual drum roll, please? All right, I guess our thing isn't working.
Damn, son, where'd you find this?
Super delayed. Drum roll, here we go. Oh, wait, I gotta say what my final 6 is. All right, I'm going with Michael Russo's guess, because he's the only one that put in there. We are going... Here's my guess for the final 6. Coin and Amazon. Full disclosure, I'd go Meta over Amazon. I'm going with my gut. I'm going with Meta over Amazon. And I'm going Amazon over Coin. Sorry, Michael Russo. I'm switching up your guess a little bit. I'm keeping Amazon. Here's my final guess. GameStop, Nvidia, QQQ, Netflix, Amazon, Meta. All right? One more drum roll, please, for dramatic effect. All right, SPY was number 1. All right, that was one of ours in the headline. 2 was Tesla, knew that. Apple, and then Nvidia, number 4. All right, so I'm 1 for 1. I'm 1 out of my 6. I'm 1 for 1. AMD. I did not put AMD in there. Guys, I put that in my list of names. Oh, no, I didn't even put that on my list of names you could vote on. Oh, I did, yeah. Oh, but then I screwed it up because oh, God. All right, so I'm 1 for 2. QQQ, yep. That was in my final guess. All right, 2 for 3. Not bad so far. Meta. Woo! So I made a good final switch call to Meta over whatever coin, Michael. I made a last-minute executive decision, I switched coin to Meta, kept Amazon. So again, my predictions were GameStop, Nvidia, QQQ, Netflix, Meta, and Amazon. Amazon's on there as well. So I'm 3 for 4 right now. AMC, we knew that was on there. And Microsoft, wow. All right. So my predictions, I was wrong about Netflix. I don't see Netflix on here. I was wrong about Netflix, and what else was I wrong about? Whoa. You guys recognize what's missing from here? GameStop, not in the top 10. Honorable mentions, we had Moderna, Ford, Baba, Mullen, DWAC. Wow, I didn't even think about DWAC. Netflix, SoFi, Peloton, and Lucid. Shout out Chris Kache again for that article and segment idea. Not Palantir, Mara. I haven't looked at any of the Bitcoin miners in a while. All right, guys, we do have only about 8 minutes left on the show. If you guys got any tickers or anything, any trades, anything you'd like to check out, let me know now. Otherwise, we can just go through some more of the top headlines that we're watching on Benzinga.com today, as well as Benzinga Pro. I'm trying to think. I feel like there was something over the weekend that I wanted to talk about on the show, and now I can't remember what it was. Now I can't remember what it was. Just a quick rundown in terms of agenda for the rest of the day. We will have stock market movers with my man Money Mitch starting up here in about 7 minutes. And Mitch has a big show. He's going to be talking to Jay Hadfield, the founder and CEO portfolio manager at Infrastructure Capital Advisors. I'm always excited when Jay Hadfield comes on the show. Going to be talking to him at about 1:15 p.m. Eastern. Can you check DIA, please? Most searched. Oh, wow. Why did no one tell me that you guys could see my screen? I didn't know you guys could see what I was looking at. I was just making sure the redirect was set. All right. Now you guys know what it looks like from the back end. Now you guys know what it looks like on the show from the back end. So you guys are all helping me produce today. So happy about that. Let's go back to Benzinga Pro. Someone wanted us to check out DIA. Is that the Dow Industrial Average? I believe it is. I will say, I probably shouldn't even tell you guys this. Probably the funniest mistake that I ever made when I first started trading. And again, this was like during COVID 2020. This was 2020. I literally opened my Robinhood account like February 2020, a month before the market crashed. So I'm like watching CNBC, like trying to figure out, reading Benzinga articles, trying to figure out what's going on with COVID, what's going on in the markets, whatever. I was shorting Dow, ticker DOW, Dow Inc., some like Dow, like some chemicals company. Dow Chemical is a diversified global, I shouldn't say some, it's like a huge company. It's like a $50 billion company. But Dow Chemical, so it's a huge chemical company, a result of the Dow DuPont merger. And I was trading this thinking it was the Dow Industrial Average, thinking like I was like, oh, I'm going short the Dow. And then like I look at my trades and I was shorting Dow, the company, thinking I was going short the Dow. So again, I probably shouldn't be telling you guys that, but that was just some silly mistake I made when I first got in the markets, and I hope no one else makes that same mistake. So that's why I'm telling you guys. Can we check out DIA, Dow Industrial Average? So we talked about this with Andrew Aziz, who was on the show. The Dow is supposed to be a little bit safer, a little bit more stodgy, a little bit, just more consistent among times of economic uncertainty. So if you think about like a thing like ARKK or Tesla, something super speculative, something super growth oriented, more likely to get crushed when we do see an economic downturn. The Dow names are supposed to be more kind of Warren Buffett names, more value names, I think some big energy names in the Dow. United Healthcare, I believe, is actually the biggest weighting in the Dow. You also have Apple up there as well. And the Dow is just 30 companies. We can look at right now the Dow holdings, and it's, 30 big companies. I don't hate, I guess, if you'd rather own Dow here than some of the other indices, just because if you're expecting some more economic uncertainty. But you have to realize, or not what you have to realize, I guess in my opinion, what I should say is that if we do see continued economic downturn, Dow's still going to get hit anyway. It just might get hit a little bit less than SPY. But we've already seen that happen. We've already seen this play out. We see SPY down 25% or from its highs, whereas the Dow's only down 10%. The flip side to it is now, what if the market actually performs well in 2023? What if, for whatever reason, everyone out there thinks, okay, the market's going to be really shitty in 2023. We're going to see this recession. What if, for whatever reason, it outperforms? The Dow's not going to do as well as the S&P 500 is. And to me, the downside on the SPY right now is kind of limited, right? You're already down 25%. I made that point a minute ago when Andrew was on the show. If we get confirmation data that's showing, okay, we're moving toward a recession, people are spending less money, I don't necessarily think that means full stock market S&P 500 crash, because we've already seen the market come down 25% anticipating that downturn. So my point is basically saying, if I had to pick or choose between buying SPY or buying Dow right now, I'd buy the SPY, because in the bear case, I think downside is somewhat limited. Obviously, it's not a super limited downside. Owning stocks, whether you're buying the Dow, whether you're buying the SPY, whether you're buying what you think is the safest stock out there, a stock is still a speculative asset. At the end of the day, it's still inherently carrying risk. I'm saying, if I'm going to be taking that risk on, I'd rather expose myself to the SPY, which, in my opinion, has the better chance of giving me better returns if the market turns around, than the Dow, which the only positive would be an upside if you think the market's going to remain shitty. If you think the market's going to remain shitty, why are you buying Dow anyway? It's got 30 of the biggest stocks out there. It's probably not going to do that great anyway. So that's just my 2 cents on Dow versus SPY, and why I would be preferring to buy the SPY index over the Dow Industrial Average Index. Again, not investment advice or anything of the like, just for entertainment and informational purposes only. But I hope that makes sense. Kevin's saying, my advice is to watch sector ETFs constantly and understand why each sector is performing and rotating. Yeah, and I think that is very sound advice, Kevin. And I think even beyond that, if the more broadly you're looking, right? Okay, I'm going to watch how XLE is performing. I'm going to watch how XLF is performing today. I'm going to look at how SPY and Dow's performing. And then you can even take that and extrapolate it to the bond markets. I'm going to watch how TLT is moving today. I'm going to watch how the 10-year, how the 20-year is moving today. And you start understanding all of those different indices and how their relationships work, and how you would maybe see, one of them trading higher and one of them trading lower. And you start understanding those relationships. It makes, I'm not going to say trading easier or investing easier, because it's not that easy, but it makes it easier to start to understand what's going on in the market on any given day, right? If I wake up and see XLE down 3%, and XLF is down as well, and SPY is down with those, I'm saying, okay, that's big recession fears, right? Energy demand trading lower, financials trading lower, and the S&P 500 all getting crushed on the same day. That's inflation fear, or that's a recession fear. Sorry. If you're seeing, say, healthcare trading higher and utilities, you might have some different takeaways from that. So to Kevin's point is to just watch these different indices, watch whether you're looking at healthcare, energy, financials, all of these things, and it might make the market just a little bit easier to understand on any day-to-day basis. You might just be able to figure out, okay, that's why that's moving up today, or that's why that's moving down today. Risk on versus risk off sectors versus bond markets. Exactly. You're seeing bond markets trading lower. I'd say, okay, without even looking at what's going on in the rest of the markets, I'm going to guess that ARK is trading higher, that people are willing to take on more risk, that people are willing to take on more speculation right now. And I've been doing that for a while. I brought that up on pre-market prep, actually, when I was helping out there for a couple days, that I was noticing XLE and XLF trading off together, which was slightly concerning to me. But all right, y'all, it is 1 p.m. You know what time it is? Time to get over to Stock Market Movers with Money Mitch. I said he'll have a Jay Hadfield on about 1:15, so you want to make sure you stick around for that interview. This stream will automatically redirect you to that show, so you don't need to go anywhere. Just stay tuned, and my man Mitch will be right with you. Till tomorrow, y'all.